So Kim, can we go ahead and call the meeting to order?
Councilmember Cormack? Here. Chair Du Bois?
Here.
Vice Mayor Fine? Mayor Filseth?
Here.
3 present.
Okay, so this is the finance meeting of November 19th. First item is oral communications. We have one speaker, Mark Grossman.
Good evening, committee. I'm here on behalf of, I'm a resident for almost 30 years here at Palo Alto. I'm here representing 350 Silicon Valley, of which I'm a director, and other interested environmental groups who collectively encourage the Finance Committee in its commitment to do what it can to promote green investing in alignment with the city's sustainability goals. We're quite happy with how that has turned up as far as policy. I'm just here to talk about a small execution part of it. So I noticed, how much time do I have?
Usually 3 minutes.
Okay. If I compare the number of TVA bonds from the end of 2017, the end of 2018, it looks like one was sold perhaps due to maturity. We're hoping that all of those bonds, which contain a good percentage of coal production in their portfolio, could be sold. I also noticed at the end of 2018 that the value of those bonds was above par by a reasonable amount, so it occurred to me to wonder why they couldn't be sold at a slight profit. I don't know what the fees are, but to exchange those for cleaner bonds. I don't know if you, obviously it's not an agenda item, you can't answer that now, but I just encourage the committee to really focus on the execution of the policy wherever it can, and also continue to look for options as far as green banking, so we're not banking with banks that fund pipelines that like Keystone XL, which is leaking massively in South Dakota and other places, and look diligently for cleaner banks, such as even the evolving public banks, which the state has now approved. So, thank you for your time.
Thank you for your comments, and hopefully staff will note the comments in terms of our policies. All right, so we move on to action item number 1, which is a discussion and recommendation to the City Council to accept the audit of the city's financial statements.
Yes. Good evening, Chair. Kylene Zay, Administrative Services Director. Item number 1 is typically an item that our city auditor would present to the Finance Committee. This report was reviewed and published while we still had our consulting help from that perspective, but obviously we don't have a current city auditor. So what we did in lieu of that, since all the reports are done, is we actually have Benjamin Lau here from Macias, Ginny, and O'Connell, our third-party auditors. He's been working with other neighboring cities such as the county of, or local jurisdictions such as the County of Santa Clara Library, as well as other cities such as Pleasant Hill, Roanoke Park, and Santa Rosa. And so he's here to help present these materials in the absence of our city auditor. And he's been with the firm for a number of years and I think has many years of experience in governmental audits. So we're lucky to have him here with us to help us present these statements.
All right, so again, my name is Benjamin Lau. I'm the director from MGO, Macias, Ginny, and O'Connell. So I have been with the firm for 16 years, and I am here to present on behalf of David Bullock, which is the engagement partner of this year's audit. We're the external auditor for the city, not internal, external auditor, external independent auditors. And for David Bullock is actually at AICPA expert panel conference, which meeting, which is basically the standard setter of the governmental accounting. For this year, I am the technical reviewer of your financial statements, all 7 of them. And about my experience, I'm an auditor since I started working. So as as mentioned, San Jose, Oakland, Santa Clara is my clients. For this year, I'm also the signing director for several cities, Mountain View, Sunnyvale, Fremont, Santa Rosa, so to name a few. I'm here to present 6 documents, and the first one we have is the biggest document, the comprehensive annual financial report, CAFR, and the for the city's CAFR that also includes a single audit. And I'll go through it briefly, and I'm going to flip through some pages just as a reference. So for page 1 to page 3 is the independent auditor's report, and that is in the financial section. And you can there's a tab there, financial section. For this year, for the audit opinion, we issue an unmodified opinion, which in plain term, non-accountant term, is a clean report. We did not have any issues with financial statement, no qualification. Again, it's a clean report, which is the highest standard the city can obtain. And we issued a report on November 4th, and this year relatively is a calm year for the city's financial reporting. I'm not talking about internal, but I'm talking about new standards that has been out there that the city needs to implement. In prior years, you might have heard about a lot of pension, OPEB, all the employee benefits. Those has been implemented by the city in 2015 and 2018 respectively. And this year is termed as a calm year. On page 54 and 55 of the CAFR, again, it's page 54 and 55. It lists out what are the standards that has been implemented for this year's the city for this year. That includes GASB statement number 83 and 88. 83 does not have an impact, does not have a significant impact to the city's financial statement. GASB 88 is a very short statement, I think 6 paragraphs. There's 2 things to highlight on that. Number 1, the standard required the city to separate the direct financing type of bond issuance into a separate category on the financial statement. So it's more like more transparency. The other thing is to disclose about any significant events of default and any acceleration clause for bond for related to your bonds. So the city has implemented that at a paragraph to describe the situation just to satisfy the standard. And those 2 paragraphs are in page 79 of the financial statement. What I want to highlight is, as I mentioned, this is a relatively calm year, but in the future years, so GASB is nice. GASB is the standard accounting standard board for governments. For the next 2 years, 2 new standards is coming in, which is implemented, which might require some effort from the implementation. Number 1 is GASB number 84, that is for fiduciary accounting. And the biggest one is actually GASB 87, which is on leases. And if you go online and search lease accounting, you can look at any documents. It will be the implementation guide will be like in the 400 pages long. So it is a very extensive standard, and why GASB is doing that, GASB is the accounting standard board, why GASB is doing that is try to align the government accounting with the corporate accountings, which is under FASB. So that is something that the city needs to be aware of, and we as the auditors and the finance department is working on that to ensure that there's a smooth implementation. So with that said, it is a calm year. And another highlight, maybe that's the last highlight of the CAFR, is for this year, the only significant transactions that requires to be communicated will be for the issuance of the 2019, I think it's a COP, certificate of for the parking garage, and that might be the only transaction that is significant. So that is properly reported, not something out of ordinary, but I just want you to be aware of that. And with that is the CAFR, and I can have 2 ways to present right now. One, I pause right now and ask and look for any questions. That's one way. The other way is I can continue on my 6 reports.
Why don't we do it report by report?
Okay, let's do that.
Do we have any questions on the CAFR?
Yeah, for And one way that might be helpful, Chair, is if there are questions for staff in terms of, why there might be a variance versus a more technical question from a schedule perspective that Ben may be able to assist us on. And don't forget, item number 2 this evening is actually for the Finance Committee to actually approve the CAFR and approve budget amendments in various funds. So there's a staff report that goes with it. And technically, this full attachment is part of item number 2. But if it's transmitted with certain sections of it are transmitted in item 1.
Do you have any questions?
Are we going through the 6, which says item 1, or do you want to do it in this different order?
Just as he goes through the doc, let's do it related to.
I think the other way might be I can continue to go through the
Like
thing. It might be
6.
another like 3 to 4 minutes,
Okay.
and then we can open the forum for discussion. Right. So I will continue. The next document, which is within the CAFR, is towards the back end of the financial statement. Of this document is the single audit report, the last tab of the financial statement. This is the audit of the federal awards and compliance. And on page 177 is the schedule of expenditure of federal award. During this year, the city received this year means 2019, the city received $8.8 million of federal awards. And if you flip to the next 2 pages later, page 180, this is our summary of findings and question costs. And towards the bottom of that, we have listed out the 3 programs that we have audited this year. And those are the 3 Type A programs that is above $750,000 threshold. We have audited all 3 programs, and we're happy to let the committee know that we have not identified any findings through the audit. So it's a very clean report for this year, no compliance finding at all. And flipping to the next page, we as the auditor also are presenting a follow-up of prior year findings. And last year there's a finding regarding the recording. It's a very minor finding, but it's a recording of the loan. And at the bottom of the document is there's a status of the finding, and it has been corrected. And we as the auditor has verified that. And for this year, we verified that it has been a clean recording. We don't have any other adjustments specific for that. And that is the CAFR with the single audit. And I have 5 more reports to go through, and it will be relatively quickly. The first one, which is to report to the City Council. And this is our required communication towards the end of the audit. And this document is in attachment A in your packet. It's about a 6-page document. It includes our required communication. It states out what are the new standards that has been implemented for this year, GASB 83 and 88. It also lists out the significant estimates that has been recorded by utilized by the city. And we want to let the board or the city council knows that we have no difficulties encountered in performing the audit. There is no unrecorded adjustments. There is no disagreement with management. We received the management representation. All in all, we also have no findings, no internal control findings. All in all, it is a clean report. The language that you see in this document is a standard language with no exceptions. So I said a lot of there's no disagreement, no something. Those are the way accountants say things. But at the end of the day, it's a clean report. So that's the report to the city council. And the next document is attachment B. It is the audit for the cable TV, which cable TV franchise. And the year end for the financial statement, December 31st, 2018, we audit the statement of franchise revenue and expenses. Again, it is a modified opinion, which is the highest level of assurance we can provide, a clean report. And the next report that we have is the Palo Alto Public Improvement Corporation, Attachment C. And as I previously mentioned, during this year, the city, not the city, but the corporation, through the corporation, issued the 2019 bonds. So that is a significant transaction. And as of year end, there's 2 debt outstanding, total to $51 million. The disclosure is mirroring the CAFR's disclosure. And again, this is a modified opinion, clean report. Attachment D is the regional, let me flip to Attachment D first. Regional Water Quality Control Plant. We have audited the statement of net expenditures and also the statement of quarterly billings. And those are related to City of Mountainville and Los Altos, as well as City of Palo Alto. Again, it's a modified opinion. So there's basically no exceptions, no findings. And the last report is the appropriation limit report, which is the GAN AUP report. Our responsibility is to verify that the city has properly adopted and also calculate the appropriation limit calculation. That's in attachment E, and we have 4 procedures on that. And during our procedures, we have not identified any findings. And in other words, we verify that the city has properly adopted and calculate the appropriation limit. And with that, those are the 6 reports that we have to present to the committee. And we are available for any questions you might have.
Thank you very much for that report. And, congratulations to staff for a very clean audit. So I guess at this point, do we have any questions?
Hold on, Mayor. Thank you. I noticed at least one of these audits was for 2 years. Are they normally all one every year? How does that work?
All your reports are actually audited on an annual basis. There are selected report that is presenting for 2 years, just for comparative purposes, and that's why you're seeing 2 years. But all the reports that I have present are audited on an annual basis.
Okay, great, thank you. Yeah, and it's incredibly reassuring to have just one issue from last year that's been resolved and none this year. So, on behalf of all of the people in Palo Alto, it's certainly clear that we can trust our team to report things correctly. Yeah, I want to talk about that. Cable TV franchise, that one looked fine. I think it's this is probably the best description, 2-page description of who owed what when, I was like, we could have used that when we were going over these franchise fees. This is something to think about for staff reports, actually. The one on the Regional Water Quality Control Plant was also, frankly, clearer than the one that we went through last night. So that's just a little statement for you. Maybe the people in finance know how to do this. I did have some question about the rates in the Public Improvement Corporation, but they were answered elsewhere in the CAFR, so that's fine. What else? One thing that isn't clear to me, I wasn't here when we did the certificates of participation. To whom is the bond premium paid? I see that it's separate from the issuance of the debt. I just don't quite understand the mechanics of that. If it's... That's on 1C. It's our page 8 of 1.C. It's our packet page 28, which may or may not be helpful to you.
I can talk a little bit about our long-term debt. So basically, the premium is received by the city. It's received by the city, and the rationale behind that is you as the city is paying. I'll give you an analogy. Will be you're paying. You're committed in the future to be paying 5% interest. However, the market rate right now might be 2.5%. So the bondholders is actually paying a premium to buy the allotment of the bonds, and they're paying a premium on top of the par value. And by the time the bond is matured, they only receive the par value. So the premium is paid by the bondholders to the city, and the city received those premium as part of the bond proceeds.
Okay. All right, but we only received that on one of those two certificates of participation?
Depends on how the price. The premiums will depend on how the bond and the debt issuance specifically is priced.
Okay,
So, yeah.
great, thank you. Almost there, level 1 input. One thing that was a little confusing to me, I'm sorry, I don't recall if it's in this or in the CAFR, is that we've got either bid or downtown parking rolled in now with golf course. I think this may be in the CAFR. Okay, never mind, so I'll leave that for later then. My statement on the regional water quality control plant stands. That was actually a very helpful description. The part about the allocations and the fact that we don't use our full allocation, I'm on packet page 41, so you can share that with your colleagues. And on the last page, appropriations limit worksheet, I know this is something we have to think about going forward, maybe Ms. Nosey for you, but is there a limit that you feel that we should not approach, or how should we think about this appropriations limit?
Sure, the appropriations limit is actually state law.
Right.
It's to ensure that we're not overburdening or overtaxing. And so it's a formula, to be honest, that we do on an annual basis. We do it once during the budget process to make sure that our adopted budget is in line with it. And then we do it again as part of the year end based on what we actually spent.
We have never come anywhere close
No.
to it, have we?
Correct. We are not anywhere near.
It's more of a technical thing, and then the debt service ratio, which we have in the other one. Okay, great. That's all I have on these 6. Thank you all so much.
No, I
Mayor
remember-
Filseth,
I
do you
remember
have
Sharp was
questions?
worried about it 1 year ago, but I think.
We're good.
Yeah.
It's not something that keeps me up at night.
The PIC debt is all COPs, right? Do we buy prepayable COPs?
Prepayable
Yeah, can we pay them
COPs.
off early if we wanted?
I don't know if our debt is structured that way. I don't think it is.
Yeah.
How do you pay them over?
You mean did the city has the option to prepay?
Yeah, does the city have the option to prepay them?
As long as it is.
Yeah.
As long as it is.
Sure.
Yeah. The worst case might be a call premium.
Right. Yeah. Right, okay. And are we going to finance the public safety building and the garages through the PIC?
Yes.
Okay. So we can expect the total debt on COPs to go up substantially higher than 50 million, right?
Absolutely.
Okay.
Which is a very, very correct assumption.
I just have a couple of general questions. So how many years have you been doing the Palo Alto city audit?
For my firm,
Yeah, your firm.
let me try to recall. I think it's 8 years. I believe it's 8 years, 8 plus. Yeah, for MGO. I think it's 8 years to 8 plus.
Okay.
8 plus. Yeah, I have pretty bad memory
Okay.
on years. I can, as I said, like I just, yeah,
So very, very familiar with the city.
yeah.
Yeah. And how long does it take to perform a city audit?
For this city, I'm trying to recall. 1,000 plus for sure. I would say in the 1,200 range, maybe more.
Hours?
Yeah, hours. So it's year-round, it's a year-round audit. We come on site typically during the late spring timeframe for our phase 1, which is for the interim audit, and then towards the city, and then have the chance to close the books, has the time to close the books, and then we come in and again early, mid-September, and then we perform field work for 3+ weeks, about 4 weeks, and then afterwards we'll be there for the financial reporting, and then we issue financial statements.
Right. And I'm just curious how the process with Palo Alto compares to other cities. When you audit other cities, is it comparable?
Comparable.
Yeah.
Thanks for giving me the answer for that. Yes.
Yes?
Yes. It's
better.
It's really
It's not
hard.
the best.
It's really hard to gauge. There are better ones. There are Not as good, but yeah, comparable.
I mean, our systems are
Oh, yeah.
up to par?
Yes, yes, yes.
Yes, great.
Very smooth audit this year.
Yeah. So I have a question for staff on page 146. It shows, the unassigned funds of 54.8 million, and we actually had a speaker at the council meeting last night talking about our unassigned funds. Can staff kind of explain what these funds mean and how they typically are deployed? Packet page 146. But, last year we had 52.8 million. This year we have 54.8 million unassigned. But I assume that means it's not unneeded. And so maybe you could talk a bit about, the process with those funds.
Page 3 is the second item, that's next.
Yeah. This might be better suited for item number 2, but that is on page 146, it's a graphical representation of the fund balance for the general fund. And the assigned versus unassigned is a designation based on financial assigning and unassigning of things. We as an organization also have policy regulations in terms of assigning fund balance. And so not all of those would necessarily be in alignment with the CAFR. So we will go through that as part of the second item's presentation.
Okay. And, some of the audits have to do with kind of transparency, and it just rang a note in my head that we've had a colleague's memo outstanding around transparency for labor negotiations. So it's not directly tied into this, but it would be good to get an update on kind of the status of that at some point. And then the last question, just looking at the stats section, and maybe, are you going to go into that to an item 2 as well? No. Just notice, the city of Palo Alto is the top user of gas, and I wonder, with the closure of the incinerator, do we expect that to continue? Do you guys have any idea if we would not become a?
No, I don't know.
Okay.
I'd have to check the staff and find out.
Okay, yeah, I'm curious where we use natural gas in the city. Okay, but thank you again, very, very clean audit, and,
Do you want a motion?
sure.
With staff recommendation.
Second.
Okay, in favor? Aye. Great. All right, so we'll move on to item number 2.
On the COP issue, sorry. On the COP issue, just sort of kick it around. I mean, we do COPs because it's too much uncertainty to try to base construction projects on potential future, ballot measures and stuff like that, right? But still sort of wondering about the idea that, not at $50 million, but at such time as we run into very large amounts of COP debt, right? Especially if we do grade separation or something like that, should we be thinking about, should prepay the COP debt with a bond issue at lower interest rates?
Depending on the magnitude of the debt, we can look at that.
At $50 million, it's probably not worth doing a bond measure, right? Because that's expensive too. But if we have hundreds of millions, then maybe worth looking at if they're prepayable. Thank you.
The true interest costs actually were all in a pretty similar range of our GO bond, actually was right in between the two of the COPs. One was lower, but then the most recent ones, it was right in the same range.
It would depend on whether you could get a better
Issued at different times, et cetera, but
yeah.
it was just interesting to me how consistent they were,
I used to ask
even though it's different methodologies and different timing.
I used to ask Lalo this, and Lalo typically thought that a GO bond we'd get somewhere between 0.7% and 1% better interest rates on a bond issue in the COP, but it's pretty marginal, right? So you'd only want to consider it if there were sort of very large amounts of money involved. But again, like you said, it changes over time, and so. Yeah.
So then item 2 is the actual CAFR. So that's the about 150-page document before you, which has the actual CAFR results as well as the single audit has been alluded to. In addition, before you, within the staff report, attachment B is included as well, and attachment B, as I mentioned before, is realigning budgeted levels with how things actually performed. We'll go over those in more detail. So here we have Rima Lovo, our finance manager, who's going to go through the presentation tonight. And as you see us reaching back to our staff, our senior accountants, Jackie, Rosalind, Susan, and Maria are all here to help support. As I was telling the mayor, this is kind of like their budget document culmination after many months of hard work. So, Rima?
Thank you, Kylie. Good evening, members of the committee. Okay, thank you, Kylie. Good evening, members of the committee. My name is Rima Lobo, and I am the finance manager. So, with that, I go to...
Quick question, do you still use an HP calculator like this?
Someone does.
What are you saying?
Someone does.
At the close of fiscal year 2019, the city's total governmental funds reported a combined fund balance of 305 million, an increase of 53.8 million from fiscal year 2018. 18% is the unassigned fund balance. The city's total outstanding long-term debt of 189.3 million increased by 48.1 million due to the issuance of the 2019 California Avenue Parking Garage Series A and B certificates of participation for 42.3 million, an additional loan from the State Water Resource Control Board for 12.7 million, and a net of 6.9 million scheduled debt retirements. 60.7% is governmental activities, and 39.2% is business enterprise activities. And there were no audit findings, as you all know.
That 189, is that COP?
189.3.
No. 189 is all of our debt. The
There is
40 million roughly is the COP
COPs,
specifically.
yes.
There are other COPs within the 189. Golf course is an example. We did 8 million there maybe 2 years ago.
So the next slide shows the various columns of attachment A, the fiscal year 2019 general fund summary. The first column shows the fiscal year adopted budget. The adjusted budget equals the adopted budget and includes the budget amendments approved by the City Council and the prior year encumbrances. The next four columns, highlighted in yellow, show the CAFR basis. The first column shows the CAFR basis revenue and expenses. The allocated charges, that is the cost allocation plan, and overhead charges for administration and support provided by the various administrative departments. The encumbrance and reappropriation are funds that have been reserved when a purchase requisition is finalized or a project is not completed in a given fiscal year, and funding for that project is moved to the next fiscal year for completion. And the actual revenue expense, that's the last column in yellow, is the sum of the first three columns in yellow, and the variance is the actual to the adjusted budget. That's the last column. Slide 4 represents the major tax revenues of the general fund. Sales tax, property tax, transient occupancy tax, documentary transfer tax, and user utility tax. The total revenues were 8.4 million, above the budget levels. The primary driver of the surplus was taxes and the proceeds from the disposition of 335 Webster. Slide 5.
Sorry, where are those recognized in these 5 columns or elsewhere? The proceeds of 335 Webster?
It is
It's somewhere else, okay.
It is on attachment A.
It's just not in these 5
Not on
columns,
these
right?
5
Okay.
columns, yeah. That was only the major taxes that we showed. The total overall expense savings were 3.3 million, including encumbrances and reappropriations. The savings are attributed to position vacancy savings, particularly positions at the executive and management level of the organization. The next slide gives us the history of general fund revenues. In fiscal year 2014, revenues from major taxes were 91.4 million, and in fiscal year 2019, revenue from taxes are 132.8 million, a gradual increase over the years of 41.4 million. This information is also available on Palo Alto opengov.com, and it's at the top of the slide. The next slide is the replacement chart to correct the chart in the staff report on page 7 or package page 55. The chart shows the actual expenditures for fiscal year 2019 and the budget for fiscal year 2020.
Ask a question on that one.
Mm-hmm.
So if you just look at the actuals, not FY 2020, public safety in particular is going up fairly slowly. Looks like, where's my note here? Looks like it's going up like 3% a year, right, for the last 6 years. Why is that? Because typically our public safety budgets increase like 10% a year or something like that, at least the last few years, right? And wages and benefits in public safety go up considerably faster than that. So why is it only going up 3% a year? Are we losing headcount, or how does that sort of come together?
So in the past, I think we had vacancies, and we are trying to fill the vacancies, and maybe that's why you see the gradual increase.
I would have guessed it would go up faster than it's going, right? So are we filling vacancies more slowly than we anticipate? Is that what's going on?
In the past, yes.
So we budget primarily almost for full staffing, not quite. And I would say in the last few years, at least that I've been here, we've definitely struggled. Especially on the fire side, we held a lot of positions vacant during the Stanford negotiation timeframe. Sometimes upwards of 10 sworn positions. And if you think about a sworn position is a few $100,000 each, and those are being staffed with overtime. Now, don't get me wrong, overtime does cost, it's time and a half, but you don't necessarily have the full loaded costs on those salaries. So you're seeing this kind of weird mix over the last 3 years, I would say, as both in fire and PD, we've been working to either morph our staffing based on, where we're at with contracts, or frankly, it's hard to recruit for PD. It's super hard to recruit and keep up with the attrition rates. In here, you do have some jumps, and you can kind of see them sometimes when there are contracts that are in place. And you'll see a jump when the contract goes into place, and then it'll be steady for the next couple of years thereafter. Because usually contracts from a labor perspective, more typically, not always, are front-loaded from a kind of compensation perspective, and then smooth out over the term, as opposed to have spikes in the latter years of them. So, we'd have to go back and look at the specific terms and vacancy rates, but those are the kind of major things that are fluctuating.
Can I ask a question on this chart too? So looking at planning, community environment, and development services, it's actually been relatively steady when you add the two together, except when we started development services, it really jumped up, right, in 2015. What happened then? Was that just...
My suspicion is we created a new department. So we really invested in development services to have the turnaround times that we now have, the one-stop shop. And so from a resources perspective, both contractual as well as staffing, when you spun out that department, it wasn't just a net zero spin out, it was actually a concerted effort to work on our permitting processes.
That was a pretty big jump, and then it's been relatively steady since, even as we recombined the department, right?
I can't speak to when we spun them out. I can speak to this most recent year in terms of when we remorphed and combined / took out transportation. Staff's real goal in that was that we would be net zeroing resources, that we would be repurposing and reallocating them to the extent possible with minimal additional costs.
Is transportation still in planning on here, or just doesn't
On
show
here,
up?
planning and community environment does continue to include transportation.
Thanks.
So the next slide is the budget stabilization reserve for fiscal year 2019. The reserve at June 30th, 2019 was $54.8 million. After 842,000 approved amendments for FY 2020 and the recommended budget amendments of $11.3 million, the current projected 2020 BSR level at June 30th, 2019 will be $44.3 million, or 19.2% of the general fund expenses for fiscal year 2020, above the target level of 18.5%.
Just 1 second on that, Rima. Councilmember Dubois, to your earlier question about page 146, if you look on that chart where it says 2019's fund balance, total general fund is 75 million. Unassigned is the 54,811. That ties to that 54,811. So yes, it is unassigned, but from a policy perspective, we do keep our BSR at an 18.5% target level. So we would always expect that unassigned balance would remain in a healthy state.
Right, and so the impression, like, from the member of the public that this was unassigned free money, we're actually decreasing our stabilization reserve from 54 to 44, right?
Well, we're maintaining, I would say, our stabilization reserve. So yes, I guess technically, if the council and committee so chose, we could leave the reserve at, I guess it would be 54.8 plus 1.3 minus 0.45. So yeah, it would be roughly around 55 million, and not do the recommended budget adjustments below. And that would be frankly beyond the council's
The top
target
range
of 20%, yeah, the max range of it. So staff, and there are policies on how to use excess BSR, one of them being that it's transferred to the capital fund.
Can I follow up on that? Aren't we actually increasing the BSR? The past two budget amendments you've had at council has been bringing us to the 18.5, and this actually increases it.
So, astute question. If you look on the line where it says 2020 city manager reports budget amendments, 450 minus, we've actually already taken into consideration the budget amendments that the council has approved to date.
Okay, but the 44, I mean, this is 19.2, not 18.5.
Correct.
I don't think it's accurate to say that we're reducing it. I
Correct.
think we're increasing our budget reserve.
So last year, we ended up at 18.5, right at the bottom of the bounds.
I'd have to go back and look, but yes, we typically balance to 18.5. I would say in the adopted 2020 budget, we were estimating a reserve, if I recall, of about 42 million. So we're sitting positively.
Okay, thanks. That's
What is the range, 18.5 to 20, or is it?
The range is actually 15 to 20 with a
15,
goal of
okay.
18.5.
Got it.
How much total are we putting into the section 115 this year?
no, this is the delta. This is an add.
That's on top. The 115 in fiscal year 2020, right now the budget has 6.2 million expected to be contributed. So this would be 3.5 on top of that 6.2. This 3.5 is only the general fund, which means we would have enterprise funds contribute as well. So it would actually be 6.2 plus 3.5 plus probably another million and change.
So the 6.2 is the normal cost on the general fund?
Correct.
Okay, so we're actually paying down, we're actually amortizing some of the old debt with the 3.5.
Correct.
Okay, that's good. Thanks.
Yep. You probably
Can
hit
you-
over 10 million.
Can you just explain the reserve for the proceeds? Reserve for the proceeds that's in parentheses? Can we translate that into
Sure.
normal?
Reserve for proceeds from the sale of 335 Webster. So this is the sale of a former city manager's house. And based on the direction from the city council, they asked that we reserve those proceeds until we determine what to do with them. So instead of unassigning them where it kind of goes to the general BSR balance, saying that we're above the target following that guidance, we've set it aside here from a calculation perspective.
And when do you expect to make a suggestion about how to use that?
Soon.
Perhaps that's a question for the deputy city manager.
I was gonna say, I think.
Soon?
I think we were waiting for direction from the council.
So I can say
Well,
soon.
Well, okay, thank you.
So the next slide summarizes the overall year-over-year change in net position for each enterprise fund. Compared to fiscal year 2018, the net position for enterprise funds in fiscal year 2019 increased 23.4 million, and the prime drivers are the water fund, electric fund, gas fund, and the airport fund. The water fund had a net change in net position totaling 8 million, a 2.9 million increase compared to last year. Capital projects that were planned for the year were deferred to be completed in fiscal year 2020. The savings will be added to the fund's capital reserves to be used in future years. In the electric fund, the change in net position is 19 million, a 20.2 million increase compared to prior year. Hydroelectric generation was 17% above average. Just a second. And approximately 7.4 million of the change in net position is attributed to additional sales revenue from the sale of excess hydroelectric generation. In addition, expenditures tracked 9%, approximately 13 million below budget due to capital project deferrals, vacancy savings, delays in energy, water efficiency contracts, and lower energy purchase due to decreased load demands. The gas fund had a net change in position totaling $5.3 million, a 3.8 million increase compared to prior year. Sales revenue was 6% higher than expected, accounting for approximately 6 million of the increase, and was offset by higher commodity costs totaling $3 million. The airport fund change in net position decreased by 3.5 million due to 9.3 million in grant revenues received in fiscal year 2019. So the next slide shows attachment B, fiscal year 2019 year-end budget amendments. The adjustments across all funds were made to minimize variances and align appropriate funds with actual expense levels. The three types of alignments are adjustments to recognize revenue, net zero alignments, move budget funds from areas of savings to areas of overage within a fund, adjustments to fund balance. Summary of major adjustments. Net zero realignments in the general fund, and one exception was the 88,000 increase in election costs. The TOT revenue was 300,000 more than estimated, so the 300,000 increase was transferred to the capital infrastructure reserve and will increase that reserve too. Capital projects adjusted for actual revenue and expenditures in fiscal year 2019 to maintain overall approved total project budgets. The final slide. The staff recommends that the Finance Committee forward to the City Council for its approval to amend the fiscal year 2019 budget appropriation ordinance for various funds as identified in the attached recommended amendments to the city manager's fiscal year 2019 budget, that's the operating budget, and attachment B, Exhibit 1, capital budget, attachment B, so that was Exhibit 1, for capital budget, attachment B, Exhibit 2. And the city's fiscal year 2019 comprehensive annual financial report, which is attachment C. And that concludes my report.
All right, thank you very much. So we'll go back to the committee. We've been asking questions along the way, but people have additional questions at this point?
Sure. Hey,
Microphone.
sorry. Dave Price is $76 million, which I think comes from the increase in net position on the government activities and business type activities. How does he come up with that number? I mean, is that a real number?
If you look at your CAFL page, let's go to
29, is that the one we're looking at?
31,
Okay.
page 31.
Uh-huh.
You see that the change in net position is 76 million. So the change at the beginning of, so the net position at the beginning of the year was 1.2 billion, 1.115, and net position at the end of the year was 1191.5. So the difference between the two is the 76 million.
So, but so that includes, so it's a change in net position.
Yes.
So we're including asset values and debt values
Yes.
and all this kind of stuff too, right?
And
Okay.
also it is both the governmental and business activities
Right.
together.
So in other words, if we sold City Hall, we could access that, right? But, okay. The first couple of years we did this, I was on council, Dave Price runs these numbers every year. And the first couple of years, I actually called him and said, Dave, where do you get these? Right? Because we don't see anything like that. And I finally gave up because they do it every year. So, okay. Let's see. I wanted to ask about the TOT. Where are we? Here we are. So if you look on the staff report packet, page 52, I mean, it's in here too, right? It says that the base TOT decreased by 5.4% because average occupancy declined by 1.4%, but room rates increased by 2.5%. So you would expect base TOT to go up. What am I not? I must be drawing some conclusion that I shouldn't be, but why is that? Occupancy went down, but room rates went up more than occupancy went down. So it's sort of counterintuitive that base would go down. So what is base TOT decreased by 5.4%?
Isn't it possible it's the average is making this problematic?
Yeah.
If it's an average room rate, don't we have a wide variety of room rates?
Right, and then
okay.
a percentage of the number of
Okay.
rooms is not equivalent to a percentage of the rate.
Okay, all right. Okay.
And specifically to some other side comments on packet page 53, you can actually see how TOT is structured. All of TOT does not go to the general fund based on a council policy. The 2 TOT rate increases that have recently been approved by the voters, as well as certain new hotels, TOT actually is transferred out specifically to infrastructure. So staff, when they track TOT, are actually tracking 2 streams of TOT.
Okay.
One which is our kind of base level of TOT,
Right.
and one that is specific for infrastructure.
Don't they
Meaning,
both technically go into the into the general fund first, and
Correct.
one goes out? Okay, so
Exactly.
you're doing net here.
Exactly, which actually gets back to one of the recommended adjustments. You'll see that there's a recommended increase in TOT of 300,000 roughly, and a recommended transfer out to the infrastructure fund of 300,000. So we're constantly, from a TOT perspective, and this all hotels at 2% will change now that the most recent ballot measure is implemented. We are tracking specifically the dollars generated as well as that transfer out.
Sorry, yeah, can you just walk this,
Yeah.
so what is the percent under what the general fund says?
Okay, the percent that is under the general fund, I'm gonna have to write this out.
Because there's a 1.5 in here somewhere too, isn't there?
Not yet, remember, this is looking backwards.
Oh, okay,
So
okay,
realistically,
got
the
it.
1.5 actually only started in the, final 2 months.
Okay, so this is
19.
12% of the old hotels. The general fund is 12% for old hotels.
Correct.
Okay, got it.
But just to clarify, TOT includes Airbnb,
Yes.
and so how do you,
Or Airbnb-like establishments.
so how do you calculate occupancy decrease? Like, how do we know the Airbnb occupancy rates?
This is based on the data that we do have.
So do we know how many Airbnb beds there are in the city? Michelle's saying no.
This is, yeah, this is based on the reported information that we do have.
Can you just clarify though? Like, what do we get from Airbnb? Do they actually just send us checks?
We have a third-party agreement. So we would need to consult our
Okay.
legal.
I'm just wondering if there's any valid to this occupancy number, if we don't really know, like, how many units we have, and
The
there's
bulk
a
of
lot
our
of growth in old,
TOTs, the
right?
bulk of our TOTs from our our typical hotels.
Yeah.
And so we do track, from all of those typical hotels, the,
Yeah.
room rate, the occupancy levels.
But the 20% growth in older hotels, that could be Airbnb growth too?
I don't think we're counting Airbnb.
No, so again, if you look at, when you see the 20% growth, can you refer me to that?
Page 53?
So the 19.8?
Yeah.
That's all hotels, but that's the 2%. So it's a formula
Okay.
of the 2% on all of the old hotels as well as the new hotels, which is why it's a bigger percentage than just the general fund or the new hotels. So remember, there's 3 components. There's the base 12% on the old hotels. There's the base 12% on new hotels, and then there's the additional 2% on all hotels.
And would Airbnb be in the old hotel numbers?
The new hotels do not include that kind of revenue stream.
Okay. Looks like,
Hi, Christine Paras, Assistant Administrative Services Director. We get one lump sum from Airbnb a month, and we run it through the calculation. Our data that we collect every month through revenue collections, we include all the traditional lodgings, and we have one line item for just Airbnb, which
that's what I
isn't
thought.
necessarily broken out to that level.
that's what I thought.
Yeah,
Okay,
yeah.
so the occupancy rate is really for our hotel rooms?
Yeah, like traditional lodgings, which there's about 37 of them.
So if Airbnb became more popular, we could see a decrease in occupancy, but an overall increase in visitors staying in Palo Alto, and essentially. I mean, in a way, hotels are competing with Airbnb beds, so it's not necessarily a decrease in traffic, it's just a shift of where people are staying.
I'm not sure we have.
We wouldn't
can't
have
confirm
We don't
data
know.
on that, yeah.
We
Yeah.
can't confirm that.
Okay.
Another question, or a couple more. One is, it looks like for the last couple of years, the ARAF deities smiled on us. Is there any expectation that that's going to continue, or the mean is 0?
I will say when the council sees or the finance committee sees the long-range financial report next week or the following week, I think early December, staff does hedge on that one a lot. Since it has been consistent that we have received funding recently and rather consistently, we do forecast something, but we don't forecast anything near what we actually receive. So usually that funding is helpful for us in terms of mid-year rebalancing, because we'll typically know those levels by the time mid-year goes out for February, and that helps a little bit from that perspective. Typically, in broad strokes, when it comes to ERAF, what it means when it's disseminated to local jurisdictions is that all of the school funding has been filled up. So there's a certain threshold there, and I would have to look into more detail as to what the calculations are. But we make sure, ERAF makes sure that the schools have a certain level or threshold of funding, and then if there's excess property tax beyond that, then it'll get disseminated based on the property tax formula. So when you looked at the downturn years, there was no ERAF coming to cities, and ERAF really started to flow in the early teens of the 2000s. So, yeah.
And then also I want to ask a question about sales tax, which is, as you point out, there's sort of continued erosion of brick and mortar receipts, but it's made up for and then some by the county pool for online. Is the county's allocation of the pool, is that somewhat predictable? That is that something we should expect, or they're going to change their algorithm every year and we have no idea?
I couldn't tell you in terms of them changing their algorithm in terms of where it's based, in terms of whether it's a state law or a county. The formula for it, I can tell you, is based on our gross receipts in the county compared to our jurisdictions. So if you were to look at the entire county of Santa Clara and say that the city, I'm going to grossly exaggerate this, the city of Palo Alto receives 25% of the sales tax in the county of Santa Clara, then they would disseminate the pool of sales tax based on that 25% formula.
So they
We're
basically-
nowhere near that, let me be clear.
I understand. So if I understand what you just said, it's they allocate the pool based on a weighted average of what you do on brick and mortar sales tax.
Yes,
Okay.
or point of sale.
Point of sale.
So do we have any, I mean, that makes no sense to me at all. Like, as Palo Alto starts to lose retail and people buy more online, but maybe neighboring cities have big box stores.
Their assumption, well, yeah, I
It's
mean,
gonna
that's the issue.
shift.
Their assumption is that it'll decline at an even rate for everybody, which may not be true if you got big box stores in some places and
Yeah,
not
I
others.
mean, if we lose Fry's and other large stores, you would actually think a larger percentage of ours would be online, so we should get a larger percentage.
This is
So,
not how it is calculated.
do you guys get, is there like a meeting of city CFOs with the county? Like, how does that algorithm get determined? Do we have any input?
No, sales tax is not actually administered by the county, it's administered by the state.
But
so-
this, by using brick and mortar as a proxy, is that a state law?
I would have to check into the actual legalities associated with
Okay.
it, whether it's legislation, a case, or something, I'm not quite sure, I'd have to ask Doug.
I mean, you understand the concern, right? It's, as Palo Alto becomes more expensive, we may have less brick and mortar retail.
Sure.
Oh, I would point out, we still do have the shopping center.
That's what I was thinking of, the shopping
I was gonna
center,
say, we
right?
have a very strong sales tax base
And-
compared to some of our neighbors within Santa Clara County.
And Tesla that we get some from, or automotive that we get some from, in particular. If we get another, well, for a little while, that's right. And if there's an automotive dealership in the east, in the Baylands, right, so forth. Remind me again, where are the affordable housing funds in this? In the CAF, where do I find those in here? I mean, I think, my recollection is there's two, right? So where do I find them in here?
Can you find the page faster than I can?
Let's see. Yeah. Did you find it?
Page 120? Also, just for the committees, as a reminder to the committee, staff actually does a annual reconciliation of all of our developer impact fees. That'll come out in January, which will put a lot more context to these figures, where we really break down what's in the fund balances, pledged projects associated with them, and, what the remaining balances are, as well as how long they've been in there.
We don't actually have 52 million in housing funds, do we? I thought it was, substantially, it was 30, and then we spent 15 on Buena Vista, and then 3.
So, as Councilmember Cormack noted, there's about 28 million of that in notes. Notes receivable?
Notes receivable, okay. So, have we spent any, have we transferred funds to the Buena Vista project? Have we pulled out of that fund?
I'd have to look at the timing on that.
Okay. And I thought there were actually 2 funds.
They're combined in this report.
They're combined in this report, okay. What are the 2, if I wanted to go look at them in the budget?
They're combined in the budget as well.
Okay, I'll stick with the 1 then.
They are separated in that developer impact report, the developer fee impact report.
Okay.
There's some info about the loan on page 70, but that's all I found about Buena Vista.
But that seems, 29 seems low because I saw a projection that we were gonna add another 2.25 into those funds this year. That was the FY 2020 showed an increase in lieu.
In revenues to those funds?
In revenues to those funds.
I'd have to go look at the
Did I
budget
mistake that?
documents.
Okay. Okay.
They are project-based, I will say that, so sometimes the budget can be off from that perspective, since we are making gross assumptions and will budget approximations.
Okay. Thank you.
Thank you so much for the report. Gosh, there's a lot of helpful information in here. Even having gone through the budget, there's still more things to learn. Just in terms of the presentation itself, it looks like we should not be counting on, I don't think, selling excess hydro in this next fiscal year, but obviously that did wonders for the electric fund last year. I think the big takeaway for me with this is, a little bit buried here with the 3.5 and the 3.5, but we're going to basically, be putting $7 million into our infrastructure and paying down our debt, or giving us the option to pay down our debt. And balancing that, as we've discussed before here at Finance, I think is excellent. I certainly feel much better about our vote last night to transfer money from the infrastructure fund of it was 4.1 million, right? So, I think we should consider ourselves lucky that the sales tax and the property tax, not in that order, the property tax and the sales tax, have turned out well for us going forward. So that's the headline for me on this. Let me see what else I had on this. And then the CAFRA itself, I don't know that I have thoughtful, structured comments, but I certainly appreciate all of that on there. On packet page 57, page 9 of the staff report, the only thing is it says wastewater treatment fund is running a deficit. Are we taking any action on that, or is that just sort of expected? There wasn't an explanation of what we might do about that, or maybe we've already done it for FY 2020 and I just don't recall.
Do you know? Okay. So wastewater treatment is doing through capital. And so we're doing state revolving loans, so we aren't necessarily issuing debt for them, but we are taking on debt from the standpoint of we're doing revolving loans. So looking at that net position and the change. The other piece of it is actually that
so you're saying it's like a timing thing?
There's some timing aspect, because their liabilities are going up as we're taking out those loans. And I believe the other piece of it is actually some of our CIPs as we're advancing those projects. we're actually spending cash. That
Right, yeah, there's one big one, I know that, yeah, okay, thank you. And then in terms of attachment B, just looking through all of the detail there, I was happy to see that fire is hiring ahead. That looked like the biggest number here in terms of the expense adjustment, adding to their recruit academy. So that was one that jumped out to me. That looked like a big adjustment from the year. And the rest had to do with actuarial stuff. So that was, my last question on the staff report was packet page 70. So this was the part I was getting at earlier about the downtown parking improvement fund being combined with the golf course capital project. Is that just because we refinance them together? They'll still be tracked separately? Okay, great. That, they did not seem like natural partners. Oh, sorry, that was on packet page 70, up at the top. And then it looked like the Municipal Service Center, it looks like we didn't make any progress, and now I'm on packet page 74. Looks like we didn't actually start the work on that, since we're adjusting the revenue and the expenses. Okay, all righty. And of course, we know that the downtown parking guidance and parking management didn't quite get done either. Okay, so that's all I had on that. And the CAFR, like I said, I thought the statistics were particularly interesting, very helpful, especially as we think about looking through the residential parcels and all of that, and even the data on the, the employers, et cetera, was very helpful. So, there wasn't anything that jumped out at me as a concern. I certainly appreciate it. Thank you.
Just a couple questions. So wondering on staff's recommendation to target the BSR at the higher level versus the 18.5?
Sure. Part of that is a little bit of financial planning, and part of that is looking at kind of how the council has been spending on general Monday nights and where projects are going. As staff is pulling together the 2021 long-range financial forecast, as well as preparing to build the 2021 budget, something that I'm always cognizant of, and we as a team are cognizant of, is what would 18.5% be of the forecasted expenses, because I'd rather not have to go through the budget process and cut departments or try and raise revenue just to fund the BSR. So if there's excess BSR, it's, from a financial standpoint, I'd rather be more prudent and let it sit there for right now, so that when we're going into the budget season, we wouldn't need to be funding more. And so that's one aspect of it, and the other aspect is, we've been spending a decent amount on any given Monday, and there's some really large projects that are coming up that are unfunded. So when we talk about things like the ballot measure, and we're talking about polling and outreach, and we're talking about rail, and we're talking about NVCAP, these are really expensive and unfunded projects, and so this will give us some wiggle room in the sense of if something comes up, we have the flexibility.
And BSR funds can go to operations or infrastructure capital?
They could, yes.
Yeah, so, okay.
Yeah, they could. These are unrestricted general fund revenues.
And then, I don't know if you know, but I know it's not that large amount of money, but the fiber fund did really well, like doubled, and I'm just wondering what's going on. It's been very kind of stable over the years.
I'm sure we know. It is a CIP deferral. The rebuild project was deferred to 2020 due to staffing constraints and higher competing projects in electric.
So it wasn't a jump in revenue. Okay. Darn.
Sorry.
And then going through the BAOs and Exhibit B, I agree with Councilmember Cormack. A lot of these look pretty normal. And the fire hiring. Could you explain, starting on page 65, these the insurance items?
And.
So what are these capturing? They're a little hard to understand.
Sure. Okay, so from a general liability as well as a workers' comp perspective, we are self-insured for both of these. And so we have general liability insurance. I think our deductible is $1 million. Workers' comp, I'm not quite sure exactly what it is. I'd have to look at that. So what we do on an annual basis is we actually have a firm come in and look at all of our liabilities and what is our risk profile. And they look at the claims that are active, our historical claim, the spend down of them, and provide estimates for what's called IBNR, incurred but not reported. Thank you. And we have, and this is not just unique to us, this is kind of going on in the industry, our liabilities have increased, and so the IBNR that the report calls for at a certain confidence level has increased. So actually, we're over a 2-year span of time working to make sure that these 2 internal service funds stay solvent to reach that IBNR level. We currently have it, if I remember correctly, at an 85% confidence level.
Okay.
And so, which means we try and fund around 85% of our forecasted liabilities, both on general liability as well as workers' comp side.
So in the general liabilities, does a positive revenue adjustment mean that we over self-insured or we under self-insured?
The positive revenue adjustment. So
the 950,000 in the revenue adjustment column.
Right.
What does that represent?
So what that means is actually if you go to packet page 66, you can see liability insurance, so that IBNR, what we're increasing our liability by 1.5 million.
Okay.
So our expenses are going to go up by that much, or rather actually our reserve. So this is all money that's sitting in a reserve. And since it's an internal service fund, there is no actual outside revenue that's coming in.
Yeah.
We're just charging the departments.
So this is where it gets allocated to other
Exactly.
departments. Okay.
Yep, and so we charge departments, it goes in this fund, we have reserves necessary to meet our liabilities or our forecasted liabilities. Now, obviously, you won't see that spend happen tomorrow, but this again is a trend that we're seeing from an industry perspective.
Got it. Thank you.
Yeah.
And then the other one was on 68, the CDBG funds. Same kind of question. Looked like we were combining some accounts. Housing rehabilitation funds and the nonprofit housing fund.
Yes. I would have to look into this more detail, but my suspicion is that we are trying to collapse funds that are not active. So staff manages and actively manages all of our funds. What's presented actually to the full council, we roll a lot of them up, as the mayor noted, in terms of the in lieu funds. So anytime we are having like non-activity in funds, we
Okay.
work to
So we're
close
just
them out.
collapsing them all? Okay. Great. Nobody, Eric, you didn't really go into Exhibit B, did you have any?
I didn't see anything in there that, I jumped up and down and wanted to ask about.
Sure.
So I flip through the CAFR. So page 87 of the CAFR, funds with deficits. So the Downtown Business Development District had a deficit fund. So curing it through collection of future special assessments sounds a little vague. I mean,
We recently changed how we collect that money in terms of working with our contractor. You may recall we combined the collection of the bid money and the collection of the business registry. And we put both of those under one contract with a contractor who is taking a more proactive approach to that. So
the special assessment is collections?
our expectation is that there will be a more refined approach going forward.
Okay, great. And then the other thing I thought maybe we could touch on is, now I'm on page 93 with the pension plans and the sensitivity to the discount rates. Some of these are big numbers, and I recall we've moved to 6.2, but I remember you speaking about a number that was in the 5s, right, recently? What would you like to share with us in terms of, the sensitivity to the discount rate?
Sure. Thank you. Thank you, Councilmember Cormack. This actually is both one, good practice, as well as two, something that we wanted to make sure that we called out, in tabular format and not just a verbal or narrative.
Which is probably why I found it. Thank you for putting it on the table.
The Finance Committee has discussed as part of the pension funding policy, and actually, I guess it wasn't the funding policy, we were discussing, this is when Mayor Filseth was actually Chair of Finance, how we wanted to tackle the pension liabilities. And one of the aspects of it was how do we report on this different number? And at the advice of our outside auditors, consistency is king when it comes to the audit world. Restating our financials for a discount rate that's not something that CalPERS is carrying is not advisable. And so this was our way of still reporting what our liabilities would be based on those different discount rates, but not changing all of our financial statements. And, we especially call that out like this with the sensitivity analysis as well. CalPERS provides that sensitivity analysis to us, obviously. 93. And we have obviously bolstered this section to outline, all the work that our city has done in terms of pensions, including our 115 and that changed discount rate that we're, putting in. So there's a lot of good information in here, but you're right, it is a little bit buried in the notes. But working towards that transparency associated with the volatility. And to your point, Councilmember, the most recent estimate that came out from CalPERS's consultant, Wilshire, was 5.9, not 6.2. And so that, I believe, is what you were referring to, which we haven't taken any formal action on, but that report is a public report. The primary driver for that reduction is actually them reducing the CPI. Not necessarily the rate of return of their investments, but dampening the, I'm sorry? Inflation, thank you. I was like, it starts with an I. Can't remember the word. Dampening the inflation.
So should we think about whether we should use 5.9 instead of 6.2?
That is a policy call for the council, and I think that's part of what we can discuss as part of both long-range as well as the 2021 budget development.
Right.
We do owe at this point from the Finance Committee provided really helpful direction to staff in terms of the pension funding policy, enough that staff is working to actually refine costing estimates so that we can bring a more robust product back, most likely at the Finance Committee's direction, the full council actually, to review that. But with that more robust analysis, it's going to take us a little bit longer to turn it around than the normal from Finance Committee to council within a month or two.
Got it. So, if I understand what you just said about page 93 here, it's that in terms of valuing the liability, we still use the CalPERS discount rate.
Correct.
Which I think is fine. The value of the liability is a bogus number anyway, okay? Right? Which is, but the calculation, well, it depends on the discount rate, but the asset return rate, which is not exactly the same as the discount rate, is the crucial one because you use to calculate normal cost, right? And so that's the one we got to make sure that, in my opinion, that we got to make sure that we're doing it absolutely right. But the discount rate and the calculation of the liability itself, I think it makes sense as long as we're consistent and we can sort of see it change over time, right?
Just one or two more things in the statistics. I thought page 152 with the assessed value of taxable property was, that's a 68% increase over the past 9 years. Really, if you look at so many of these things, and it's the most stable. I just think we should note that before we move on. Did you want to talk about the coverage ratios, or we'll cover that in another time? Okay. And then the other point that I just wanted to get at, Councilmember Chair Du Bois was mentioning a little bit about sources of the sales tax revenue, but if we look at page 162 with all the detail, I thought that was extraordinarily helpful. Is the reason, does that include autos? Is that part of why that number gets so big? I don't see. It's interesting to see the increase from 2010 to 2019 is pretty dramatic. Is that where autos would be, you think, and all other? I don't think it's other retail necessarily.
Apologies, this is rolled up at a higher level than I usually look at my sales tax reports, so I'm reorienting myself.
Yeah, no, I know, I was doing the same. I actually found it super helpful, because we talk all the time about retail, and this actually breaks it down, right? Department stores are very different from, drugstores, or different from furniture, apparel, like, this is actually a super helpful way. I think it's more granular for us to think about industries.
All other here will include B2B too, right? Which is
what I'm
pretty
saying.
Yeah, that's what he said, yeah.
It would be B2B, it would be transportation, yeah.
So that's probably interesting to think about, because it's the
Such a
biggest
big
delta,
category.
in all of them. And the increase in restaurants was,
So drugstores have
Made
done
sense.
particularly well.
yeah.
We do owe
Small amount.
the committee and council the quarterly sales tax reports.
Yes.
So I believe staff
Okay.
is working on that, and that'll be disseminated to the council as an info item. I'm trying to think if it'll be before the holidays. I believe it'll be before the Christmas holidays. And so that will have some more updated information specifically on those segments.
And then finally, on 166 and 167, this is some of this historical information. It's not exactly whatever we call the service indicators that, I can't remember what the phrase is for the descriptions. But even just seeing, the number of people who've been boarding Caltrain, like the hours of athletic field usage, et cetera. It's super interesting to have the 10-year horizon, so I appreciate that. And that brings me to the end, so now I really am done with those.
Thank you, Susan, for all the statistical sections.
It's very interesting. So generally, we will now take a motion, but generally do BAOs need to go to the full council? They don't go on consent. Is that correct?
So actually specifically, if we go back to that one, what will happen is we will bring this full report to the council, but specifically those recommended budget adjustments, actually moving the money from the BSR into these reserves or doing the transfers will be recommended as part of the 2020 mid-year budget review.
Okay.
So it'll be part of that cleanup memo.
But does this include everything that's in Appendix B?
I'm sorry. Oh, the Appendix B would just go to full council as a consent item.
It can't go as consent?
Yes.
Okay. All right, so I guess I'll make the staff's recommended motion.
Second.
All in favor? Aye. Great. Thank you very much.
Thank you. Thank you to Rima and Ben, and thank you, team, for all of your help on this.
Thank you.
Pretty sure none of us could have done this without them, so.
I was gonna say, I remember in.
Thank you, guys.
I remember in previous years, you did it all yourself with one guy or something.
Well, that was budget, not CAFR. Definitely not CAFR. That was budget.
So moving on to future meetings and agendas.
Yes. So currently, the next meeting that's scheduled is December 3rd with the Finance Committee. That has the long-range financial report scheduled for it, as well as, I was just going over this. Long-range financial report is scheduled, Q1 financials we're working on, as well as the
Business tax analysis.
so that's what we need to talk about. We actually are definitely not ready on that. We're working with our consultant, and hot off the presses, we have a draft report today, but we need to work on that draft report. It's not print ready. And so talking with the committee, I don't believe, as Christine and I were looking at it today, I don't think we can produce the level and quality of work that the committee is used to on such an important topic by the December 3rd Finance Committee date. We have talked about adding a different meeting. The other option is going to the full council. But it is something that I regret to say, I do not believe we will be able to make that December 3rd timeframe.
Yeah, you guys are free to leave.
So are we calendaring now then?
Well, so is December 3rd our last meeting of the year? Or we have one on the 17th?
Thank you, Ben. Technically, the council is on break after the 16th. The 16th is the last council meeting. But if the committee wanted to schedule a meeting on the 17th, that would definitely be an option.
And tell me again what will definitely be on the 3rd?
long-range financial report, the Q1 financials, we have an update coming. It's an information item about where we're at with all of the 2020 budget referrals, as well as we're doing our very best to finally get out the city services guide.
I was going to say, the services thing is coming in hot.
Correct.
And then if we did have a meeting on the 17th, would it only be?
It would only be ballots.
Thought of the
Remarkably, that is the only night that week that I am free. So,
committee. Yes, I have
well
it.
chosen.
I have it down as a finance meeting. So if staff's willing to do it, I think, again, we're pushing up.
We are.
We need to check with the clerk's availability before we confirm.
Beth gave me the green light.
Yeah.
And do we know
Hot off the
if
presses.
Vice Mayor Fine is available?
We will find out. We can have his.
If not,
Mayor,
Proxy.
you
Perhaps-
available on the 17th of
perhaps we could
December?
just check right now.
Yes, but let me check.
And then, while he's checking, I know I've been emailing, do we have a expected polling date?
We are meeting with the consultant on Friday to review. Yes, beautiful. So really quickly, then, sounds like the committee wants to confirm. We'll push out at a meeting on the 17th to go over the matrix consulting analysis associated with ballot measures. Great. Then the polling side of it, we are working on the draft poll with the consultants. Our next call with them is later this week. And so we should hopefully have something drafted by next week.
Do you know what the
Before the
date is when they will
Thanksgiving
go out?
Early December is the current plan.
Okay. Yeah, so I've been asking that, that the draft poll questions be circulated to council. So hopefully we'll see those before they go out. And I did receive a poll from the school district, who's apparently polling on parcel taxes.
That's good to know. Thank you.
And the survey was focused on interest in business-focused parcel taxes. So it started off with a general parcel, and then it said, how would you feel about a parcel based on size of lot and on type of use? And what if we taxed businesses in particular? So that was interesting. So I think it is important that we get our poll out with the right set of questions. Okay, so thank you very much. I think with that,
Start
one last
time?
thing.
Start time on the 3rd?
Oh,
Do we want to do 5:30?
could we do 6? Is it going to be a long?
It might be long.
I would really prefer if we could go to 6 on these last two meetings. So,
Great. So then, Kim, do you have that? Thank you.
great. With that, meeting adjourned. Thank you.
Thank you.